Jay Powell's speech certainly got everybody's attention from the way the markets are reacting. Do you think that he helped the economic cause of the country at this point and the world?
I think the economic priority right now is to bring down inflation and not to prematurely, loosen policies. And so what was great was that he came out as being firm and resolute about bringing inflation down to target, making sure inflation expectations don't get de-anchored. And that, I think, is exactly what you need to make sure that the economic health of the world is in a good place over, the medium to long term.
We got some good news on inflation today in our PCE report in the United States, but how about the rest of the world? Inflation and the outlook. Has global inflation peaked as it appears to maybe have here?
I think it's too early to say that. Yes, we have inflation almost everywhere. There are important exceptions like China and Japan, but everywhere else we have high levels of inflation. There are global factors like energy prices and food prices that are driving it, but there's also kind of more sticky components of inflation that are high. Now, I would be careful about looking at one data point for the U.S. I think last year, around the same time, there was a good inflation reading, and everybody thought we were on track for inflation to come down. And in October, inflation went up again. So I think one needs to be very wary about one inflation reading. We are in a period where inflation is likely to be high for a while, at least for another year or two.
And particularly, Gita, in Europe, where I see electricity prices astounding, energy prices continuing to rise. The ECB sounding hawkish as well today. I mean, how deep, how dark could a recession get there?
Well, Europe is in a particularly difficult situation because of the fact that they have gas prices that are going up, to extremely high levels, which means electricity costs have gone up. So this is a big negative supply shock for them, and that is recessionary. So I think this is a big hit to their economic outlook. Now, that said, from the central bank's perspective, while they can't deal with supply shocks, the longer inflation stays high, there is the risk that that will feed into other kinds of goods, what they call second-round effects of inflation, that they de-anchor inflation expectations. So, indeed, that would be one reason why the ECB might sound more hawkish.
Can the U.S. avoid a recession?
I mean, we've been saying that the path to avoiding a recession is fairly narrow, and given that we're in a world where we still have many downside risks that can play out, I think it's going to be difficult.
Here you were just talking about Europe and the United States. They have very transparent economies. China's does not. How worried are you that what we're seeing, what we are able to see about the Chinese economy is somewhat worrisome, that they have a housing problem, they may have a credit problem. Are they on the verge of a serious economic situation?
I mean, China is a country where we've had a substantial downgrade in July. For instance, for this year, we have the growth for China to be around 3.3%, which is well below what they normally grow at. And there are two factors that are playing an important role. One is the fact that you have more transmissible versions of COVID and the zero COVID policy that's leading to more frequent lockdowns. And the second is the real estate sector, which is in crisis. And we haven't seen a turnaround yet. So we are quite concerned about it, and which is these are the reasons why we've downgraded growth.
What does a real estate crisis mean to China, in the sense that we know what it meant to the United States in 2008 and how that spread to the rest of the world, but people have been predicting a Chinese economic problem for a long time, and it seems to have not happened. Are we on the verge of that?
The real estate sector is a big part of China's economy. So when the property sector is affected, it has implications for the rest of China. Now, the government has come in and has been helping at the local government level, but we see a need for more action from the central government in terms of the help to property developers, because this problem is not going away. The steps that have been taken will not be enough, and more will be needed to make sure that this doesn't become a systemic crisis for the rest of the economy. Now, on the positive side, inflation is low in China, and they have fiscal space. So they do have the instruments to be able to help.
Let's talk about instruments elsewhere. And I know, of course, today, Gita, you are very focused on what Fed Chair Powell and what central bankers are saying. But when I look at some of the insolvable problems right now, I think of Europe and I think of Ukraine and Russia. Is there any update to how much you can help, the IMF can help Ukraine in this current situation?
We are working very closely with Ukrainian authorities. There are multiple options we're exploring about how to further help Ukraine. We gave them a round of emergency financing very early on at the start of the war. But we're looking at other options, many other things that we will need to do to help Ukraine. Also to make sure that the macro policies are able to keep the economy on track as best possible, prevent hyperinflation. I think all of these are big concerns that we're trying to work with the authorities to help address.
Given that it's also called the breadbasket of the world, what are you doing more broadly to help on the food price front, make sure that that also doesn't become anchored in terms of, or unanchored, I should say, in terms of inflationary pressures?
Well, the recent lifting of some of the embargo on grain shipments coming out to Ukraine and the fact that we are actually seeing grain being exported, even though it's nowhere near where it would have been in the absence of the war, is helpful. It's also somewhat positive news that countries are removing some of the export restrictions they put on food. That is also helping. And so while food prices have come down in recent months, they stay very high. And we are concerned about a major cost of living crisis, especially in low-income countries, and the risk of social unrest. So it's not just the IMF, but all multilateral institutions are working together to help and provide relief as best possible to these countries.
The saying for years has been, it's our dollar, your problem, to the rest of the world. How much of a problem is the dollar right now? It's rising again today on the back of Jay Powell's remarks. The Fed's going to be among the most aggressive, it appears, of the central banks. Is that causing a real negative feedback loop for the rest of the world at this point?
What we are seeing, of course, is the flip side of which is several emerging markets whose currencies have depreciated quite significantly relative to the dollar. And of course, that has inflationary consequences for them, already on top of the high levels of inflation they're having to deal with. That's making monetary policy much more challenging for them at this time. And there are countries that have borrowed in dollars, makes it difficult for them to repay. So, while it is important for the U.S. to raise interest rates, to rein in inflation, that is good for the world as a whole, too. But there is going to be this transition when higher interest rates, lower demand in the world because of this, and a weaker currency for these countries is going to make policy making tougher.
Are we going to have to, the last question, we're going to have to see a more concerted effort at debt relief for the countries who are affected by that?
We have about 60% of low-income countries that are either already in debt distress or in high risk of debt distress. We have about 20 emerging markets whose debt is trading at distress levels. So we will likely see more countries needing debt relief. And for that, the common framework that was set up to help countries with debt relief across a whole bunch of creditors, has delivered with Zambia. The assurances came through for Zambia, but a lot more speedy action will be needed, and the scope of the framework has to be expanded to middle-income countries too.
Gita Gopinath, thank you very much for joining us today.